Now, by the end of this section, you will understand what are trend lines and how to draw trend lines. You will understand the significance of trend lines. You will learn that trend lines acts as levels of support and resistance. You will learn how to trade trend line breaks and bounces, and you will gain an understanding of the ABCD price wave movement and how to identify these movements. So let's go. Now, a trend line is a straight line that connects two or more points of support or resistance in a trend, and it acts as a line of support or a line of resistance for that trend. For example, these levels at the bottom of the market are what we call support. So we have support, support, support. These levels at the top of the market are what we call resistance. Resistance, resistance, resistance. A trend line connects levels of resistance and support. Okay, this is a downtrend, this is an uptrend. So an uptrend is when the market makes higher highs and higher lows, while a downtrend is when the market is making lower highs and lower lows. Now, there are three main categories of trend lines. We have the short-term trend line, also known as the inner trend line. We have the medium-term trend line, also known as the outer trend line, and we have the long-term trend line, also known as the long-term trend line. There's no other way. We just call it the long-term trend line. Okay, so these are the three main categories of trend line. ABC price swings. Now, the market moves in ABCD price swings. ABCs repeat themselves as long as the trend continues. So here we can say the ABCDs. We have A, B, C, D. Okay, this is how the market works. And the thing that you must understand is that this entire leg here is wave A. Okay, so sometimes with other traders you may see the labels a bit different. You may see they put the A here, but just remember that this entire leg is always the A. So sometimes the labels may be a bit different. The A may be here, the B may be here, and the C may be here. So sometimes the labels may be a bit different, but essentially what you must try to understand is what we are labeling. We are labeling the leg. So this is the A leg, and after the A leg comes the B leg, and after the B leg comes the C leg, and after the C leg comes the D leg. Once you understand this, you don't need to worry about where you put these labels, where you put these A's or these B's. Just remember that after A we have B, after B we have C. Okay, and here's a trick. You can always start with A. For example, I can just say this is A, and after A I have B, and after B I should have C. The only difference is that with this the market goes down, so I cannot have a C because C's should go higher. We should continue trending up. Okay, if it's an ABC, we should continue trending up. The fact that we go down means I should label different, means I should start A, B, C, because we now are going down. So if the market has not made a higher high, we cannot continue this A, B, C, A, B, C. So remember, we can't just say A, B, C as long as the market is making a higher high. And the opposite is true. If the market is making lower low, we can always say A, B, C, and we can continue saying A, B, C as long as the market is making lower low. So this is the way the market moves. We have A, B, C, and you can say D. I just like just saying A, B, C, and continuing A, B, and C if the market had made a higher high. Okay, so all C's then becomes a new A, and the count begins again. So draw a trend line through A's and C points. Okay, so you draw trend lines through the A's and the C's, connecting the A's and the C's. And remember, old C's then becomes a new A. So we can always say A again. Okay? After A's, we have B's. After B's, we should have C's. After C's, we have D's. Right? Whenever we're at C, we can always start again with the ABCs. ABCs. Now, trend lines must be drawn across the lows or across the highs of support or resistance, connecting A's and C's after a new high or a new low has been made. And this is extremely important. Remember, after a new high or after a new low has been made. So we're going to connect A's with other A's and C's, just as long as you're not drawing through the other candles. And we're going to take a look at that. So here we have an A, B, C, right? ABC price swing, the ABC price swing. And remember, C's, old C's become new A's. So we can start again, A, B, and C, right? The ABC price swing. But when drawing uptrend lines, connect your lowest A to the C/A or support that is closest to the highest high without drawing through the previous C's or A's. Okay, so we want to connect our A's or our C's, because they're the same thing, to another A or another C that is closest to the highest high. So where is the highest high on this chart? The highest high on this chart is here, right? This is the highest high. So we want to connect this A to this C, because this is the C that is connected to the highest high. But we cannot draw through this candle here. We cannot draw through the candles, okay? We want to connect to the C with the highest high, but we cannot draw through the candles. So we have to connect our A to this C, okay? Here is an incorrect way to draw a trend line. We want to connect our A to the C of the highest high, because this is the highest high, right? So we want to connect our A to this C, but we cannot draw through the candles. That is why this is incorrect. You must not draw through the previous C's/A's, okay? Now here is the correct way to draw the trend line. So we connect this A to this C. We cannot draw through the candles. This is the correct way. This is the incorrect way. So let's recap. We want to connect the A to the C that is connected to the highest high. Okay, we want to connect the A that is connected to the C of the highest high, but we cannot draw through the candles. Now, here is an incorrect way to draw the trend line again. We want to connect the A to the C. In this case, we're looking at a downtrend line, so it's just the opposite of the uptrend line. We want to connect the A to the C that is connected to the lowest low. So where is the lowest low on this chart? The lowest low on this chart is this low. Okay, this low is lower than this. It's lower than this. This is the lowest low. So we want to connect our A to the C that is connected to this lowest low. So this is the correct way to draw this trend line. So we connect this A to this C here. Okay, it's connected to the lowest low. That's how we draw this trend line. Okay, so we connect this A to this C, and we can see we have a trend line break. So open a demo account and practice drawing trend lines. The trend line is one of the most powerful indicators. Every trader, every successful trader uses a trend line. Okay, we all draw trend lines because it is extremely important to draw our trend line. So open a demo account and go and practice drawing these trend lines. Drawing trend lines, look for the most recent ABCD and draw a trend line connecting the latest A to the latest C. That will be the short-term trend line. Now look for the lowest A and draw your trend line using the rolls, and this will be your medium term trend line. Now the next step is to compress the chart, that is to zoom out or go to the larger time frame to draw the long term trend line. Okay, now here we have a chart with the long term trend line, the medium term trend line, and the short term trend line. So here we have the long term trend line, here we have the medium term trend line, and here we have the short term trend line, which is connected to the most recent ABC. Okay, this short term trend line here is connected to the most recent ABC. This is the medium term trend line. Okay, and this is the long term trend line. So we have 3 trend lines on this chart. Now pause this video and try to identify the short-term trend line and the medium-term trend line on this chart. Now, did you get this? Did you get this? This ABC. Okay, this is the most recent ABC, and this is our short-term trend line. Now, if you had drawn the trend line from here to here, it would still be okay, because there are traders that will be drawing the trend line from here also. So it will still be a valid trend line. It's just that it's best to draw your trend line, your inner trend line, from the most recent ABC. Okay? And here we have the medium term trend line from the lowest low connected to here, connected to this C, and we have the medium term trend line. Remember, this is the C that is connected to the highest high, but we cannot draw through this candle. So we have to connect this A to this C. Now pause the video again and try to identify the short term and the medium term trend line on this chart. Okay, so did you see this? Did you get this A, B, C inner trend line? And here we have the medium term trend line. This A connected to this C, okay, because this is the lowest low. So this is the C that is connected to the lowest low. So remember, practice drawing your trend lines. Go to your MT4 platform and practice drawing trend lines. Trend line breaks. Now, when the short-term trend line is broken, the market will predominantly move to the medium term or outer trend line. And when the medium term trend line is broken, the market will aim to test the longer term trend line. Trend lines act as support and resistance. So when an uptrend line is broken, it will now act as resistance. And when a downtrend line is broken, it will now act as support. So let's look at this. So here we have the inner trend line. You can see the inner trend line is broken. Here it acts as resistance. Okay, it prevents prices from going higher. So we say it acts as resistance. And then the market, once it has broken the inner trend line, it moves to the outer trend line. And guess what we have at the outer trend line? We have an engulfing bullish candle. Okay, so we have an engulfing bullish candle at the trend line. So we call this a trend line bounce, and you can buy here. You can enter a trade here with stops below the engulfing bullish candle, and that would have been a successful trade. Okay, that would have been over, that looks like over 60 pips. Okay, over 60 pips on this trade. And again, remember this. Trend lines act as support and resistance. So when an uptrend line is broken, it will now act as resistance. And when a downtrend line is broken, it will now act as support. This is extremely important. So here we can see the trend line is acting as support. Okay, this is the downtrend line. And remember, when the downtrend line is broken, it now acts as support, preventing prices from going lower. Once it has been broken, it acts as support. So before the market broke the trend line acted as resistance, preventing prices from going higher. And as soon as prices break the trend line, it now acts as support, preventing prices from going lower. So here we have the trend line again acting as support. So we have a trend line break, market pulls back to the backside of the trend line, and we have what looks here like some tweezer bottoms, right? Like some tweezer bottom here. However, prices fell, and then we get a morning star pattern here. Can you see this morning star pattern? Also tweezer bottoms, right? Morning stars, tweezer bottoms at the trend line. This would be an amazing trade. So you would enter the market here and you would have made a lot of money. So Forex trading can be very simple. It's just all about managing risk. So you would put your stops below the low, enter the trade here, and you could have made a lot of pips. Now here again, we have an example of the trend line acting as resistance and support. Here we have tweezer tops at the trend line. So this is a sell trade, and you could have exited the market somewhere here with profits. Stops above here, taking some profit off the trade. Market broke the trend line, you exit this trade, and now you're looking for another trade. Prices pulled back to the backside of the trend line, and here you can look for a buy trade. You can look for a candlestick pattern here, and maybe you get a buy trade here. So here's where the market pulls back to the backside of the trend line and gives you a potential buy trade. And I like to trade using this method. I like to enter the trade after the market has broken the trend line. I like to wait for a retest of the trend line and enter on the backside of the trend line. And look at this. So much pips, right? So much money you could have made on this trade. And the market does this over and over again. Here is another example. The trend line in this case is acting as resistance. So we have an uptrend line act as support here, and here the market broke this trend line, rallied to the backside of the trend line, and here it is acting as resistance, preventing prices from going higher. And this is also a sell trade. You could have sold the market somewhere here, anywhere here, right around here, stops above this high. And yeah, you could have made money on this trade. Now, did you learn what are trend lines and how to draw trend lines? Did you learn the significance of trend lines? Did you learn that trend lines act as levels of support and resistance? Did you learn how to trade trend line breaks and bounces? And did you learn the ABCD price wave movement and how to identify these movements? If you're not sure about all these points, please watch over these videos again. And remember, if you like the course, please leave a review. Now, in this lecture, I'm going to discuss a very simple technique that you can use as a beginner to start trading Forex, okay? So let's go. Now, this technique involves the use of moving averages. So go to indicators, click on trend, click on moving averages, and we're going to select 20, okay? Select 20 period and simple. So for MA, select simple. For period, select 20. And you can choose a random color, okay? Now we're going to click indicators again, go to trends again, moving averages again, and this time we're going to change the period to 10, okay? 10 period, still simple, and you're going to change the color. So let's say we're going to use black. Now, this technique works with the trend. So you can only use this technique if the market is trending, whether it's in an uptrend or downtrend. But we cannot use this technique if the market is going sideways, okay? We're only going to use this technique if the market is trending. So the first thing you will need to do is draw your trend line. So here we have a downtrend line. Okay, so you would need to draw your trend lines. Now we're going to look for where the red crosses over the black, and that is a sell signal. Now, because we're in a downtrend, we're only looking for sell signals. We're trading along with the trend. If we were in an uptrend, we would be looking for buy signals, okay? But because we're in a downtrend, we're looking for sell signals. So here, the red crosses over the black. This is a sell signal. And you could have sold the market here, stops above the highs, market fell over 70 pips. So this technique is pretty simple. Here again, red crosses over the black, market fell. And we can continue looking for crossovers. We're only looking for sell signals because the market is in a downtrend. So here we have another sell signal, prices fell. Okay, and it's a pretty simple technique. But remember, once the market starts to go sideways, we're not looking to use this technique. So here, the market is going sideways, up, down, up, down, up, down. We're not going to use this technique once the market starts to go sideways, okay? So only in a trending market. Now let's look at some more examples of this. We're still in a downtrend, right? We're still in a downtrend. We can draw a line here. We are still in a downtrend, okay? Sell signal, right? So it's a pretty simple technique. So as a beginner, you can start getting involved in the Forex market by using this technique. And as you gain more experience trading Forex, you can start using more advanced techniques. So you can use the stuff that you learn in this course, stuff like the evening stars, the morning stars, candlestick patterns, trend line breaks and trend line bounces, and you can combine the stuff you learned so far and you can make a trading technique. Okay, and this is just an example of a simple trading technique that you can use as a beginner to start trading Forex. So you can look for sell signals. Okay, let's go on a larger time frame. Let's go on the 1 hour time frame. And as you can see, it's still a major downtrend. Okay, still a major downtrend. So we would be looking to sell this market. We would be looking for sell signals. Okay, look at this evening star pattern. Remember the evening star pattern, market fell, right? So we're looking to sell this more. Here we have an engulfing bearish candle, market fell, right? Candlestick patterns and this downtrend line. So look at this. Here we have the red crossing over the black, market fell, right? Here again, sell signal, market fell. Here again, sell signal, market fell because we're in a downtrend. Let's look for an example of an uptrend. The market is in an uptrend, and here the black crosses over the red. This is a buy signal, right? Here again, black crosses over the red, buy signal, market rallies. So this is a pretty simple technique. You're not going to get rich using this technique, of course not. This is a simple technique, a simple beginner's technique, but it is something that you can use to start trading Forex. Get involved, okay? With Forex, you have to start trading. You have to get involved. You need to get involved in order to learn and improve as a trader. So this is really something very simple that you can use to start getting involved. And as you can see, it's pretty simple and you can actually make money using this technique. And remember, you need to be careful not to use this technique once the market starts to go sideways. Okay, if the market starts to go sideways, this technique will no longer work. Okay, it only works if the market is trending. So here, the market is going sideways. The moving averages will cross over and over again in a sideways market. Okay, so this technique is only for a trending market. And remember, this is a beginner's technique. It is something for beginners to start trading Forex. Okay, this is something beginners can use to start getting involved in the market. Okay, so remember, if you like this course and if you think this course can add value to other students, please leave a review. And remember to check out my other courses. I have a course on fundamental analysis. I also have a course on trading with the smart money. And you can get access to all my courses by going to www.learnforexmentor.com and using coupon code Udemy101. Okay, so that is a special discount coupon code only for Udemy students. I hope you like this technique. Start practicing using this technique and just gain some experience trading Forex.